Okay, I mentioned in a previous video I would do a little video on non-refundable tax credits, and I'm going to use the age credit to display this. This stuff gets confusing. It's not complicated, but it is confusing. So here we go. Let's get into it. I'm going to use Ontario as an example, and I'm going to show you where you can get this information. Okay, so here's the information I've looked up. The age credit, the federal age credit for anybody in any province is $1,124, and you get all of that until taxable income reaches $37,790. So this is for seniors. This is 65 and older. But this is a means tested credit. So that means the threshold is this. Once your taxable income surpasses 87,750, you lose all of the age credit. So this is the way I do it. Other people do it differently, but I like it this way. So that means for every dollar above 37,790, I lose 2 cents in federal age credit. Now, every province has their own age credit as well. So in Ontario, you get $261 of age credit up until taxable income surpasses 38,463. And then it's completely gone once taxable income surpasses 72,903. So you lose basically 3/4 of a cent of credit for every dollar over 38,463. Now, a credit, you have taxable income, then you have expenses, then you come to an amount that the government bases their tax rate on. So then you calculate your tax. A credit is you subtract from that tax. So it's not you're reducing your taxable income, you're reducing your tax bill. So although, you know, $1,000 of tax credit is so much more valuable than $1,000 of taxable income reduction. So keep that in mind. So that's how this works. So how do you figure this out? So here's how I came up with this number. F6. Hang on, let me click on this. Okay, it's just simply this divided by this 72 minus 38. So that's how I come up with you lose 75% of a penny for every dollar of income over 38,463. So let's get into an example. Okay, so let's say taxable income is 50,000. So how does that affect the age credit? Well, the threshold is 37,790, and that means we're over $12,210. So if I take 12,210, multiply it by 2 cents, that comes to $275 of federal age credit reduction. So there's full age credit. Therefore, I only get a federal age credit. I only get $849. So that's full age credit is 1,124. I lose 275 because I'm over the threshold, and therefore I get 849. Now in Ontario, same, you go through the same process. I lose $87 of Ontario age credit. Full Ontario age credit is 261. I get $174 of credit. So total federal and provincial credit on $50,000 of income is 1,023, whereas it would be this plus this if I didn't surpass any of the thresholds. So what is that? That's 1,385. So I've lost some age credit there. Okay, so let me show you this. Let's say I get $1,000 of interest income. My taxable income is 50, and then I get $1,000 of interest income. How does that $1,000 of interest income affect me? Okay, first of all, I have to pay tax on that. So with income of $50,000, I'm in the close to 30% marginal tax bracket. Tax on that is $296.50. My after tax on that $1,000 of interest is $703.50. But now I have to take the age credit reduction into account. So I lose $30. That $1,000 boost to my income from the $1,000 worth of interest reduces my age credit by $30, both federal and Ontario. So in effect, what is happening here? There's my after-tax income on the interest income, and I also lose on the age credit. The effective benefit to me of that $1,000 interest income is $673, not $703 anymore. So my effective tax rate is 32.66. I wanted to show you $1,000 worth of dividends from a Canadian corporation, because this is where it gets a little funny. You get $1,000 dividend. The tax rules say that we gross that dividend up by $380, 38%. So my taxable income is boosted by $1,380. I pay tax on $1,380, but I get a dividend tax credit, so I don't really pay that tax, and that knocks me down to an after-tax income of that dividend of $924, and that's the 7 I forget what the rate is. So it's a lot better than the interest income. However, the age credit or any credits, any means tested credits, are based on the taxable income. So the taxable income isn't 1,000 anymore, it's 1,380. It's the grossed up amount. However, so you can see it's still we've got $1,000 of interest income and $1,000 of dividend income. It is the same, it's still $1,000. However, my age credit drop with the dividend is bigger. But note this, everybody should note this. It is still much more beneficial to get $1,000 of Canadian dividend income than $1,000 of interest income in a non-registered account. Okay, so I wanted to show you, where am I getting all this information? This is a good site. So take a look, taxtips.ca, but you can get this information in a lot of places. Okay, so I'm going to focus, here's the age amount. This is the age credit. Maximum credit is $1,124 federal, starts to disappear at $37,790 of income, is completely gone by $87,750. Then every province has their own. So here's Ontario. Age amount 261 is the credit. Starts to disappear at 38,463 and is completely gone by 72903. And you can see a few of the other things in here. So let me read this. 2019 non-refundable personal tax credits. Tax credits in this table are the amounts to be deducted from the tax payable. So that's important. This isn't a reduction in taxable income. This is a reduction in tax payable. $1,000 reduction in tax payable is a pretty big deal. On $50,000 of income, you're paying what? 7,000 or 8,000 of tax. Well, if you take 1,000 off that, that's a pretty big percentage reduction. These things are all indexed. So these things are all, they all adjust with inflation, which is good. This is good news. Tax brackets adjust with inflation. That is good news. That means if you don't get a raise, you're not further behind because you might actually fall into a lower tax bracket. Okay, back to the spreadsheet. So the big one, the big means tested program is Oas Clawback. You get, okay, the old Age Security Clawback. Maximum is 7,362. Everybody gets that, assuming they were in Canada for 40 years by the time they get to their 65th birthday. But everybody in Canada gets 7,362 as long as they've been in Canada for a long time. That starts to disappear at a taxable income of 77,580, and it is completely gone by $126.58. So it's basically 15 cents of loss of OAS income for every dollar above $77,580. So here's an example. Let's say taxable income is $100,000. There's the threshold. We are over by 22,420. The clawback is 15 cents times 22,420. Okay, so the OAS amount less the clawback equals what I get. So in this case, I would get $3,999. I think I'm going to leave it there. These are secondary issues. These aren't primary issues. If your income is up here, well, there's only so much you can do, and you can't blame the tax system. You can't really blame a financial planner about this. There's not much you can do. The only thing you can do, if you really dislike this or any other clawbacks, is lobby your local politician. I mean, these are the rules. I'm not stating whether I agree or disagree with the rules, but these are the rules. Anyway, thank you for listening, watching, listening.